Well, the last time David Rovelli was here, that was about 3 weeks ago, he said investors should wait until earnings are out before putting any substantial money into the markets. Well, the earnings are out, or most of them, and they have mostly been good. So where go the markets? Well, Rovelli, the managing director of U.S. equity trading at Canaccord Genuity with us. Of course, John and Sheila here as well. Always a good conversation. Okay, so David, where go the markets?
Well, actually, I'm very happy that the market's finally going up again, and it's good that it's going up because of positive earnings, like you said. But you got to be a stock picker, and first thing I would look at this week after the Fed on Tuesday, I'd look at Cisco's earnings. If Cisco's earnings are good, then I take a look back at Cisco, Broadcade, Emulex, NTAP. I take a look at all the storage networking stocks. That's the way I would play this market. See what Cisco says, where they're seeing strength. See what Chambers says about the European economy.
Then does that mean that? Does that mean that you're not going to say, because you've been saying sell the rally this whole time, right?
Yes.
Does that change your stance?
And I was right for 3 months until last time I was here. I'm first to admit when I was wrong. And I'd rather be wrong and the market go up. So the way I look at it, once we went past 1105, we took out the downtrend. You got to play the trend in this market. So what I would do now is I would buy on the dips in certain selective stocks. For example, we like Cisco. We have a $29 price target, but I would not jump in before earnings. I'd wait for the print. It's just you're much better off going that way.
Dave, are you suggesting, though, that the Fed news is a 10-hour thing? It's not a, we're going to be able to move on to Cisco after tomorrow's?
No, actually, last time I was on too, I mentioned quantitative easing too, and you guys kind of chuckled at me. But now it's at the forefront.
Well, hold on. I don't think we're at quantitative easing just yet. Even if the Fed put some of the money that it got back to work, that's not.
It's coming. It's coming. All I do is read about this, and I read a lot of intelligent economists, and it's coming. It's a matter of when it's going to come in August, September, October, November. The worst thing that could ever happen to the market is the deflationary environment. It's horrible. You do not want to own stocks, and the Fed is going to do everything they can.
Why are you so sure?
It's just a gut feeling. I read these blogs. I'm not saying it's fact. It's not. But the guys I read are very, very intelligent, and they don't want it. It's not like they want it, but they know the Fed's going to do it because deflationary environment, two things happen. You lose all your pricing power, and then you have wage deflation. And if you have wage deflation, it's horrible for the consumer. People, there's no jobs out there as it is. Now the people that have jobs aren't going to be making the money they want to make.
That's the point. We need businesses to start using that cash to start spending it, as opposed to just what the Fed can do. Hey, we want Bernanke to be doing what he can. But
the last two beige books, he downgraded the economy. Downgraded the economy. I'm telling you something. My gut opinion, I don't know inside information, something's going to happen.
So you mentioned pricing power, you mentioned inflation versus deflation. I want to talk about consumer staples because a lot of emphasis on that after P&G's reports. You said you like tech maybe after Cisco's earnings. We'll see where that goes. How do you feel about the consumer staple sector?
I think you have to be selective. That's why I keep on saying I know it's redundant. You got to wait for the print. See what the company says. If they're a global conglomerate and they're having trouble over in Europe and it's 30% of their business, I personally wouldn't buy it. I'd look at the chart, wait for a better entry point. But otherwise, certain stocks like Procter & Gamble didn't put up a great print. But if that stock comes in, I like Procter & Gamble. It has a nice yield. I'd buy it.